Good morning, traders and investors. Steve Gans here, and welcome to the weekend update for March 23rd, 2025. Before I get launched into the weekend update here, I'd like to ask a quick favor of everyone. If you find that these analyses are helpful, they help you prepare for your week of trading and investing, please give me a like, a thumbs up, and a subscribe. Those are the ways that I know that this is hitting home, that it's information that's helpful to people. So again, please go ahead and do that for me if you would. I'd greatly appreciate it. And then let's get on with the weekend update and analysis. So for this weekend, first of all, we did have a little bit of a sideways chop in our markets here last week. Now, when we came down to this low, I was expecting a potential bounce in that area. And I said last Thursday night that on Friday, more often than not, we tend to get a bounce on a Friday, specifically after you've had a significant down move. Now, that can be just what they call a dead cat bounce. It can also be, in many cases, shorts that start to cover. People that did get short when we broke this 200-day moving average and rode that down, going into the weekend, start thinking, yeah, I don't know if I want to maintain my shorts through the weekend at this point. So we did get a rally back on Friday, and then we rallied a few more times, and those few more times we just chopped back and forth in this particular zone here that may be a little problematic for us. That's right around that 5,700 mark or so. And so whether or not we breach through that, I don't know. I'm pretty neutral right now on our markets. Now, a couple pluses, though. We can see that in SPX, there was massive volume on Friday, but not necessarily a big market move. Now, one of the reasons for massive volume on Friday, it was quadruple witching. That is where the quarterly options expire, the monthly options expire, weekly options expire, and of course daily options expire. So that creates a pretty significant volume spike in many cases. A lot of times that volume spike is accompanied with a big move in the market. This particular time it didn't happen to be a big market move, but lots of volume. So I kind of discount that volume a little bit on Friday just because of that particular situation. Now let's get into specifically start looking at SPY, and we'll look at volatility as well. So SPY, of course, is going to look almost the exact same as the SPX because it's just 1/10 of what SPX is. And again, I think you're going to see that we're just chopping sideways here in this range right now. It remains to be seen where we're going to go from here. I don't have a lot of conviction necessarily to the upside. It wouldn't surprise me at all if we came back down, tested these lows, and then we'll see maybe chop around there a little bit and then maybe finally start to move to the upside. If we do in fact come in and break these lows, I think our next area we're looking at is probably down around here. So we need to see how that plays out. If we do in fact start to go a little bit higher, I'm not expecting to go significantly higher, maybe back up to around that 200-day moving average line and possibly chop a little bit sideways there. Now, one of the things that is looking a little bit favorable to our markets is the fact that volatility has fallen off significantly. So volatility is back down around the areas that had been highs previously, so it's fallen back down to that point. That's a pretty good sign when volatility and fear in the market, panic in the market drops off to that level. That at least gives a case for chopping sideways. Maybe not necessarily higher, but at least a little bit of a sideways chop as opposed to additional downside fear. Let's take a look at the Qs. So very similar story in the Qs to the SPY. Again, came down, made that big low here last week, had that pop up on Friday, then just chopped sideways for the week. And again, same thing here with the Qs. We're gonna have to see if that low holds. If it does hold, I would expect a rebound back up maybe to the bottom of this channel and back up to that 200-day moving average. I'm not personally expecting any sort of rip that's going to get us back up into the middle of this channel or even back to all-time highs in the near future. I just don't see any catalyst to make that happen right now. Again, barring any unforeseen political moves, again, politics seems to be largely driving the market here at this point. So if we look at the volatility of the Qs, again, seeing the same thing. Volatility has fallen off quite a bit here. Good sign for chopping sideways or maybe in a little bit of a bullish market. So it came back to what used to be those prior highs. So that's a typical place I might expect that to pull back to. And then take a look at IWM. So IWM is the Russell, and we can see that it has pulled back probably even a little more severely than the other markets. And then it also rallied, shopping a little bit sideways. So the Russell is definitely the weakest of them at this point. And we need to see where it goes. It wouldn't surprise me if it did break down through these lows. If it does, that's going to be a little bit bearish on the other indexes as well. Now, the Russell, of course, is largely small caps. They may move a little bit differently than the big caps do, but many times they can be a lead. So we'll just have to see how that plays out. And if we look at volatility on the Russell, again, same story here. To the plus side, that volatility has pulled back and does seem to be probably starting to stabilize around where it had previously been highs back in this area. So we're going to have to see how that kind of plays out over the course of this week. So again, please do me a favor. If you like this, if you find it helpful, give me a thumbs up and subscribe. And so thank you very much, everyone. Now, those of you that are part of the alert service, and if you're watching this on YouTube and you're not currently part of the alert service but would like to know more about it, I'll put a link in the description down below so that you can go check that out, find out more about what that's all about. But essentially, that's where I share trades, live trades that I am making. And what I do in each one of those is I basically create a short video that could be anywhere from 3 to 5 minutes in length, and that video will basically explain when I'm opening a new trade, why I'm opening that type of trade when I'm opening it, and I'll share my actual order that I'm floating out there. I'll share when I get filled on that order, and then also when I go to adjust that trade, I'll explain my adjustment in a video and why I'm adjusting. And this is not day trading. These are longer term trades that I could be in anywhere from 14 days up to 90, 120 days in some cases. So there are many days that I don't make a trade or an adjustment. The service is priced very affordably, keeping that in mind. And it's something that people don't have to be glued to their screens for. They can check in usually once a day, about an hour or so before the market close, to see if there's anything that needs to be done. I mainly trade butterflies and variations of butterflies. There's a very specific reason for that too. I'll put a description down below on that also, to where if you're not real familiar with the butterfly, you can get a little bit of a 15 to 20 minute intro to butterfly trading and why that's my favorite trade. So please take a look at that, and now let's get into the analysis of these particular trades. So as we look at these, this trade right here has been the one that's been a bit of a challenge. I've had to adjust this way more than I would like, and I have been hit and miss as far as my success on when to adjust that. There's a few times there when I zigged thinking the market was going lower, for example, and I adjusted my trade to set up for a lower market, and then the market didn't go lower. And then there were times that I set up the trade for the market going higher, and it didn't go higher. So the bottom line is I had been wrong a lot on that particular trade, but it is rebounding nicely. So this trade had been down more than double what it's down right now. It is recovering well. It does expire rapidly, so it expires this next Friday. So I'm going to see this T0 line really start to mound up quickly here. And when that gets close to profitability, I'm going to do one of two things. I may close the trade out and take either a small loss, maybe a small gain, or I'll thin that trade out, basically rolling these wings up on both sides, reducing risk in the trade, but attempting to ride it closer to expiration. So that's going to be my game plan there, assuming the market stays in a general range that it's in right now. And again, this trade is put on with a fairly decent range of 5,600 to about 5,750 or so is where the wings are on this trade. So I've got a fair amount of range that I can play in there, which is nice. Now, this trade over here, I will look to start to thin it out. It's got some nice profitability going in it at this point, and it's up 12 to 15%. Now, being up that amount, many times that's when I would look to pull the plug on a trade. But again, this one was entered very well with a great risk-reward ratio. And it is that great risk-reward ratio that's given me such wide break-evens on this that allows me to maybe carry this trade a little bit deeper. And again, what I'm looking for is simply that theta decay that happens in there, more profitability to come into that trade. And when that starts to happen, I'll end up doing the same thing here. I'll thin this out, reducing my risk, raising my wings on either side, and may let that trade go a little bit further. In certain conditions, I may also choose to just go ahead and close it out. Now, this trade also entered very well back when that was entered. It was entered on a higher volatility day. Again, as part of my video, I explained why I'm entering it, when I'm entering it. It's had a couple of adjustments along the way. I have greatly reduced the risk in this trade as it has gone closer to expiration. This trade has very nice profitability in it right now. And again, I'm expecting the market to probably chop a bit sideways. So this is about 15% or so profit right now. As the market continues to chop sideways, again, I've got a very wide range here from about 5,500 up to about 5,900. So I've got essentially a 400-point wide range here that I can let SPX decay for maybe another week or so. Again, letting that theta come in a little bit more, and then either look to thin this out where I'm reducing risk, raising the wings on both sides, or closing the trade out. Not quite certain which one I'm going to do on that one yet, but we'll see how the market plays out this week. Now, the next one here is Lucid. Now, this is a Leap that I bought, Lucid Motors. And I also bought the car. I think most of you know that. So I went and test drove one, absolutely loved it. It was trading very inexpensively. So I bought Leaps on this. These are long contracted options that don't mature for a couple of years. And I'm down slightly in those right now. Again, this is a long-term play, so I'm not real concerned about that at this point. And I'll look at it more closely as the months progress to decide, okay, is this something, has it started to make the move I want it to make or not? If not, and if I don't see some light at the end of the tunnel, I may pull the plug on that for a small loss, but we'll see how that progresses. Now, this one, which started life as SQ or square, and then the symbol converted to XYZ, the company is Block. So this particular trade has been a bit of a challenge in that at one point, it came out literally overnight that they had some potential accounting irregularities back in 2023. When that happened, this trade had been up a decent amount of money. When that happened, it gapped down and dropped very quickly. No time to consider pulling the plug, adjusting, etc. after that news broke. So now I've been just kind of riding this thing out. This is also Leaps. These are long-term options. And again, we can see that these things don't expire for almost 2 years. So what I'm doing right now is I'm watching the market analysis on this. I'm trying to determine, are those claims legitimate claims or not? It's hard to tell that. I don't know that I'll ever know the answer to that one until it ultimately gets to courts, etc. But I'm starting to see now that there are companies that are stepping in saying it's oversold. This is probably a good time to buy it. And it has held its ground after that drop. It's starting to chop sideways and even move up a little bit. So for that reason, I'm not pulling the plug on that just yet. And then the final one here is something I'm doing the wheel strategy with. Now the wheel strategy is where you sell a naked put, waiting to get assigned that stock in a drop. And again, I've got a whole set of videos on this that I shared with people in an alert service. And in this particular case, I have rolled those puts multiple times, I believe maybe 6 or 7 times at this point, and I'm up about $3,300 in this trade. At this next expiration, which happens in about 25 days, if FTNT gets back above my short strike there, I'll be up about $4,000. If it lands just a little below, I may finally go ahead and take assignment on these shares of stock. And then once I take assignment, I'll start selling calls on the other side. And all the selling of the puts does and the selling of the calls does is it greatly reduces my cost basis in this position. So when I do ever get assigned those shares, I've essentially purchased them for well below the current price. For example, right now my shorts are at 100 here, and if I were to get assigned the shares at 100 or say 99, I can take my cost basis and reduce it by the amount of premium that I've taken in on these over all the months that I've sold those puts. And then once I start selling calls against that, I can further reduce the amount I've technically paid for shares by the amount of additional premium I've taken in every step of the way. So that's it for the weekend update, everyone. Again, if you find this of interest, please subscribe, give me a thumbs up. Also, remember I'm going to have 2 links down below for you. One of them is going to be to the alert service, so you can check that out, see what that's all about. And the second link will be for a special little, I'll call it a mini class, if you will, on butterfly trading and why I tend to choose butterflies for my income trading purposes. So, thanks so much, everyone. Take care.